Good afternoon, guys. This is Ankur here, and I welcome you all to my YouTube channel, Technical Analysis, The Unbiased View. So, after a small break of 2 weeks, this is the first video I'm recording, and this video is going to be a very special because the risk reward ratio would be unbelievable. I'm talking about a risk reward ratio of 1.5% risk, and the minimum return would be 15%, on the upside 30%. So with the stop loss of 1.5%, we are talking about a returns of 15% and 31% subsequently. So this is a weekly chart of Coal India. If you would have noticed in the past on my channel, I have pointed out few stocks for the investment like NBCC, Commercial Engineering, Alpha Geo, Container Corporation, Bajaj Finance, right? There were few more. So all of them have minimum given a run up of 15 to 20%. Few of them have given even more. So there are few criteria if we which find in the weekly chart, because weekly charts are always better to evaluate a multi-bagger stock or a stock where we would like to find out a run up of 15, 20, 30%. Because weekly chart, the formation, longer the stock price action takes to create the formation, larger is the data and more the reliability would be. So on those grounds, this is the weekly chart of Coal India. Now the blue lines, what you are watching on the screen, these are the three blue lines. These three blue lines are acting as a resistance, which are, this is the starting point, which are starting from over here. And the middle resistance line is dividing these two. And the stock happened to make a double top exactly over here, as you can see, right? So this double top is this particular double top comes at 165. That's one. However, the stock happened to close on Friday at 145.55. Now, in weekly chart of Coal India, you can see there is an inverted head and shoulder formed with two shoulders on the either sides, left and right, between 23.6% and 0% of the Fibonacci. That's most important point. Any long-term formation, if you find between 0 to 23.6% of Fibonacci, whether it is a rounding bottom pattern or it's an inverted head and shoulder or it's a ascending triangle, any of these kind of a bullish pattern in this area, after a long fall, it means the stock is ready for a new run up. That's point number one. There's a small diversion also in the RSI over here when the head was formed. Correct. Now, in Coal India, immediately the stock has a support of 60 and 20 weekly exponential moving average. Point number three. So the 20 exponential weekly moving average comes at 143.33, and 60 weekly exponential moving average is coming at 145.29. So that 21 or 20 weekly exponential average, the value which is coming at 143 will act as a stop loss. And the another reason is that it is also taking the support of this band, which is acting currently as a support, right? So the first bare minimum target for us would be this double top, at 165, which spells out to be roughly around 14% return, right? And the stop loss would be 143. So we are talking about 1.5% kind of a stop loss on a weekly basis, mind you. On a weekly basis, I mean, you need to see Friday to Friday. That's number. That's point number three. The another point which I would like to discuss with you is on Ichimoku Cloud. If I put Ichimoku Cloud on weekly chart of Coal India, I can show you a couple of points which are very interesting over here. There is a bullish crossover within the cloud between the conversion line and the baseline. Correct? The conversion line is nothing, which is your 9 days highest high plus 9 days lowest low divided by 2. And the baseline works at 26. 26 highest high and 26 lowest low and divided by 2. So there is a bullish crossover within the cloud, and the future cloud is turning out to be again bullish. Correct? So if the cloud breakouts come in Ichimoku, if this cloud breakouts come along with the breakout of this particular trend line or the breakout at the time of the double top, that could give us a second target of 190, which will be approximately over here, 190. So that 190 will spell out to be a 31% kind of return from the today's closing, current closing, right? So these are the point which I would like to discuss, that the data of inverted head and shoulder, it started forming inverted head and shoulder pattern. Let me just hide the Ichimoku. The inverted head and shoulder started forming from 2nd of March 2020, and we are sitting today at on July 2021. So it has a decent enough data of 1.4 years, correct? So it's long enough data to have a reliability on this inverted head and shoulder. Then 20 weekly and 60 weekly exponential moving average are acting as a immediate support. Immediate support. And let me repeat it again for you. The 20 EMA, the 20 weekly EMA or 21 weekly EMA support is coming at 143, and 60 weekly exponential support coming at 145. So these two are acting as a immediate support for the coal India. The second point is that this a long inverted head and shoulder is getting formed in the lowest range of the Fibonacci channel. Correct? Currently, the stock may rise from here and could take a resistance at the double top at 165 and may cool down for some time. That's A. B, if it breaks out this double top pattern along with the cloud breakout, which I have shown you in Ichimoku, then the next target would be 190. Correct? So why I'm discussing this? Because only because of the risk reward factor. It may touch 165, it may go 155, it may go 190, it may go beyond that, or it may cool down immediately, it may reverse also, it may have some knee jerk reaction. That is also a possibility. We cannot rule out any possibility in the stock market. However, the better would be that if we find an investment where the risk reward is very, very favorable for us. We are talking about losing out 2 rupees and we are talking about gaining at least 20 rupees and 45 rupees, which turns out to be 14% and 31% from the current closing. So that is the risk reward I could spot on Coal India's weekly chart, right? So have a look. If you understand technicals, you can have your own evaluation, whatever I have said. And that's it, guys. So thank you for watching, and think about it. This could be another good story. Maybe some news is there in the stock, because especially when these kind of pattern forms in the weekly chart after a long time, then there are some news which is hidden. And yeah, one more thing before cutting the video, you see the volumes. The volumes are phenomenal. You look at the volumes over here and look at the volumes over here. So the volumes are also hinting that there is some action, correct? There is some inside action which is happening, and there could be a good surprise in the stock in coming days. So something is happening in Coal India, and we should not avoid there is a great risk reward ratio. The risk is only 1.5%, and the reward is 15 and 30%. So having so many factors, I think this is the stock we should focus rather than focusing on those stocks which have already had extraordinary run up in this bull run. Yeah. So thank you, guys. Thank you for watching technical analysis, the unbiased view. Hope to record another video shortly. Yeah. Thank you. Bye bye.